Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
So we're going to take this. I'm going to make a copy. Save as cash flow options. Let's say 2018. Because I want to do research. And here I can do research for anything I'm going to do. So I'm going to go in. I want to make sure. And what I like about this is, look at this. We got all our rules here. I got all our rules here. And I like that. So let's put in our symbol. Our symbol is X. Okay, our current price for X is $39.52. 39.52. We're going to go with the month of February. Okay, and we got 36 days. Now, let's look at the chart for a second. Remember we said that if the stock is moving too much, it could hurt us. If you guys had to give that a number between a 0, a +1, a +2, or a +3, what would you give it? Yeah, I'd give it a +2 as well. It's definitely bullish, and so here's what we're gonna do. So because of that, because it's basically a +2, which means it's fairly bearish. Instead of going, normally you go 1 or 2 strikes out of the money. We're going to go a little bit further out of the money. We're going to go all the way to a 42, which is a 38. That's going to give us some more room. We may not capture as much cash flow. So let's click. So basically, we're looking at buying the 42. So let's put that into our spreadsheet and see what we're looking at. Call sold 42. Delta, we said, was, the delta is 38. Now, somebody tell me, what does the delta mean in terms of probability? What does the delta mean in terms of probability? Yeah, that means there's a 38% chance that the stock is going to be at 38 or above. So, and this is why when Matt created the system, he chose 40. If we were a +1, then maybe, in this case, maybe we would have done a 44. Does that make sense? Or if the stock were neutral, maybe we'd even go higher. We'd be like right at the money. But in this case, I want to be a little bit below it. Okay? Now, what's our credit? Our credit on this stock at that strike is $1.50 per share. 1.5. We're going to pop that in there. And looky there. Yes, the likelihood of being assigned. So here's what we got. We're going to get $1.50 per share credit. Max profit is going to be the standard return on investment. That means that if we take what we can make for renting out this stock, basically that $1.50 is essentially 3.8% of this $39.52. However, because we're 36 days out, and you can run the calculation yourself. You can take $1.50 divided by 42, and then you can say, okay, now we're going to take that number divided by 36, and then multiply it by 30, and then you'll see that you'd come out with 3.8. And that's 3.2. Now, here's the thing. If the stock, let's come back over here. If the stock if it just stays where it is right now, if the stock stays where it is, then we're going to make 3.8%.